Hello, good evening, everyone, and welcome all of you to this 12th episode of Yashaswini and Idol. And today I am coming from Chennai. I am over there, and with me there is CA RK Bhai. So, Rajendra Kumar ji, a chartered accountant and honorable Central Council member from Chennai and from South region, rather, I should say. And before starting me and giving me to share something to all of you, I will request him to address all our participants. So over to RK Bhai.
Hello, everybody.
Good
It is a
afternoon.
proud good afternoon, very much. Good afternoon to all of you. In fact, it is a proud privilege for me to address all of you through this particular forum. In fact, our CA Preeti Savla Madam, who is the member of the Board of Discipline ICI today, she is in Chennai, as we have some of our hearings posted here today. She's doing a great job as a women member in particular and as a chartered accountant in general. In fact, I am very much pleased to note that these webinars are held almost week after week and a lot of knowledge enhancing sessions, especially for the women chartered accountants, is being organized by her. I must say she's a champion for the cause of women in the ICAI, and I am immensely pleased to be in your forum, and also I am honored that she is there with me as a member in this Board of Discipline, and we do whatever that is best possible to render justice to our members and also to all those who come before us seeking justice. Best wishes to all of you. Thank you very much.
So thank you very much, Rajendra Kumar ji, who is the presiding officer for this Board of Discipline under Section 21A of Chartered Accountants Act. And we are doing really great work, and we have completed the highest number of cases last year, 1,903 cases. So under his as a presiding officer, under his able leadership, and this year RK Bhai is heading GST committee. No, is a vice chairperson of GST and Career Counseling Committee. And if you want to be the career counselor, you can empanel at ICAI, and you can empanel as a career counselor, and you can contribute for the benefit of the students aspiring for chartered accountancy. Coming to our agenda of women excellence. So friends, we had one of the best program of women independent director, opportunities, roles and responsibilities, and various arenas at Mumbai recently, and had excellent response, and it was applauded by all the participants. The similar program we are coming out at Ahmedabad. So all the women who are independent directors as well as aspiring for becoming independent director can join in Ahmedabad. It is on 20th of June. Again, we are coming out with CA Women Leadership Enclave on 29 June. We have got excellent response for the same. And friends, let me tell all of you, we will be closing the registration very soon, because we have received more than 80% of the registrations. So if you have not registered so far, my request to all of you, please register. Once we announce the speakers, you will feel, if you have not registered, you will feel that we want to attend, but we are not able to attend because registrations will be closed soon. It's filling very fast. More than 80% of the registrations are already over. Still, we are continuing with the early bird discount, but very soon we will close the early bird discount also. So my humble request to all of you, we have already sent SMS as well as mass mail to everyone, so that you can click the link and register. And we are going to have a wonderful time. The global leadership, the networking, lot of opportunities, the panel discussions on professional opportunities, as well as on business side, as well as on profession side. The leaders in the professions are there across world. So I request all of you to register immediately and rather today and not wait further so that we increase the fees and close the early bird discount. With these words, again, today's session, we have expert on IBC, CA Sudha Navandar, for voluntary dissolutions. And she has also taken earlier the sessions. And again, she's come back with a lot of new issues which are coming regularly in voluntary dissolution. And we have CA Nisha Gala, who is experts. She is also CA, but expert in the management skills and management and the leadership qualities. So she will also share her experience in that. We have with us Aarti Karwande, uh, CA Aarti, CA Ishita Visaria, CA Kirti Agarwal, and CA Mansi Patil, who all will be sharing their valuable times by moderating this session. And my wonderful, beautiful, intelligent women participants, audience, I welcome all of you. And with these words, I wish all of you to see very soon in our CA Women Leadership Conclave on 29 June, Saturday at Sahara Star. Stay connected, stay in touch. Looking forward to see you all. Thank you so much.
Ishita ma'am, over to you now.
Yes, thank you. So it is a great pleasure to introduce today's speaker, CA Sudha ma'am. She's based out of Mumbai and originally hails from Jodhpur, Rajasthan. She completed her chartered accountancy in 1989, information system audit from ICI in 2004, internal audit studies from BCA Society in 2005, cleared her CPA examination from State Board of Colorado, USA in 2007, insolvency professional in 2017. She has also completed certificate course on business responsibility and sustainable reporting in 2022. Along with it, she also completed course on economic commercial laws and economic advisor in the same year. She is empaneled as a peer reviewer on peer review board till 2025. She has also cleared an independent director course from Indian Institute of Corporate Affairs. At presently, she is partnered with Mrs. Praveen R. Navandar and Company, which is based out of Mumbai. The firm is established in 1985 with 5 partners. She is also designated partner in IPE Saksham Insolvency Resolution LLP. Professionally, ma'am has been chartered accountant for more than 30 years, handling audit and corporate consultancy. As an insolvency professional, she has handled a corporate insolvency resolution process of IRP of real estate company with a debt size of 900 crores. The financial creditor went for withdrawal of CIRP under Section 12A, but she was IRP for about 21 months. She has also been acting as authorized representative for home buyers in case of Modela Textile Private Limited, a Mumbai-based company with about 100 home buyers. She has prepared more than 15 resolution plans and handled 15 voluntary liquidation, which includes 6 liquidation of subsidiaries of foreign holding companies. She has represented herself before NCLT for majority of the voluntary liquidation. Ma'am has been speaker at Sky High Symposium organized by Women Excellence Committee on various topics and even on voluntary liquidation. On the same topic, she has also addressed Ahmedabad branch of WIRC. She has been invited by Insolvency and Bankruptcy Board of India, that is IBBI, at New Delhi in 2021 to address women insolvency professionals on occasion of Women's Day. Ma'am has also co-authored for a booklet for Standard Chartered Bank for salaried people. She has also been part of resource person for WRC referencer for IBC in 2021. She has published articles in Chamber of Income Tax Consultants on voluntary liquidation. Ma'am is also independent director at Anand Rathi Wealth Limited, Tribhuvandas Bhimji Zaveri Limited, Kolte Patil Developers Limited, Yasho Industries Limited, and few more. Other than that, ma'am has also participated in 6 Standard Chartered half marathon. she has been table tennis player and has participated in inter-district level in her school days. Ma'am has also completed Vipassana Art of Living Landmark Forum courses and has been president of Rotary Club of Mumbai Ghatkopar in 2017 and 18. So with such outstanding, what we call achievements, we invite ma'am to carry forward the session today. Over to you, ma'am.
Thank you, Ishita, for your kind words and great welcome. So, good afternoon, all the participants. I'll just share my screen. First of all, I'd like to thank our the chairman, Preeti Savla, for the WMAC, for giving me this opportunity. And I really appreciate the Yashaswini series that they have started. It is ideal for women. Timing is ideal for the women, and also the topics for which women can handle and help them in their profession. And today's topic, the voluntary liquidation, is also such topic which is quite, comfortable for ladies to handle this. I hope I'm audible clearly.
Yes, ma'am. Audible clearly, ma'am.
So I also thank today's to Kamisha Soni, the vice chairperson, and also the coordinators, Ishita, Kirti, Mansi, and Aarti Karvande. So this topic, it is voluntary liquidation is under the section 59 of Insolvency and Bankruptcy Code 2016. These provisions actually were enacted from 1st April 2017. From 1st April 2018. So before that, the liquidations were used to be held under the Companies Act 1956 and then Companies Act 2013. And we all know that the liquidation processes used to take years altogether to close any company. But with the enactment of this provision, it is a very time-bound process and it can be closed as soon as within 90 days also. So we know all the other types of modes of exit like strike off or to get the dormant status or exit when you get merged. In this, the under IBC, the liquidation, that is a general liquidation, section 33, is for the company which are in stress. And then they undertake liquidation. But the voluntary liquidation is done voluntarily by the directors and the company is solvent. So it is comparatively smooth. There is no stress for money. The money is adequate and all the creditors are paid. And the balance left over is distributed to shareholders. So who will undertake voluntary liquidation? In the companies which have been formed for a special object and that object is achieved, then they can opt for voluntary liquidation. Or secondly, the subsidiaries of the foreign subsidiaries who have been formed for doing some business, but the business is not viable or they want to exit the country, then this is a very good mode. By this, the company get closed, the compliances that they have to do get stopped, and the money in the company, the shareholder of capital or the reserves gets distributed. The funds are released and the company is closed. And the third category can be when in
Yeah,
the
ma'am.
event for, yeah, hello.
Your PPT is not being shared yet. I think you need to open that.
Okay. Oh, Is it visible now?
Yes.
Oh,
You can do,
I will do the.
yes, yes. Sorry to disturb. Yeah, please continue.
Yeah. So I'm talking about this section 59 voluntary liquidation. So it can be done by when the object is achieved, when there is no more business to be carried on in any entity, and third, the foreign subsidiaries. And just to get a brief, what are the agencies involved when we undertake this process? The one is, of course, the insolvency professional that we are the chartered accountants, or who are the insolvency professional. Second agency, we have to report to ROC. Third is the Insolvency and Bankruptcy Board of India, IBBI. And in the fag end of the entire process comes the NCLT, which is the adjudicating authority. So voluntary liquidation is a process-driven process. Procedures, all the provisions are laid down clearly. And the most benefit is there is no court involved at all in the entire process. And the company is dissolved, it's finally dissolved permanently. Wherein the strike off, if any liability comes, the company can be revived. But here it is conclusively closed. And it is directors driven. So there is total consensus, there's total support from the directors. Yeah, there is no hostility involved in this liquidation. So what the benefit that I shared is release of assets. The fund which is locked in capital for years gets unlocked. And who can undertake? It is the corporate person they have written. That means the private limited companies and the LLP. But this process is not applicable to financial service providers. It should not be involved in the financing activities. So what is the qualification for the who undertake the process? Like, he should be an insolvency professional. The insolvency professional is an exam which is conducted under the syllabus prepared by the IBBI, and it is conducted by the NISM for the exam. So then once you become an insolvency professional, you can undertake this, you can become a liquidator under this process. And who is appointed should be independent of the company. They should not be auditor, previous auditor, or should not have remuneration more than 10% of his total income from this entity. He should not be a related party of this company. In short, he will be eligible to be appointed independent director of such corporate person. And there should be no restriction or debarred by the IBBI. Sometimes the IBBI is very strict in its strictures, and if you have not done any compliance, they just remove us from the membership also. If you have any pecuniary interest with the company, we have to disclose beforehand to the IBBI and the company. This is actually the Insolvency and Bankruptcy Code 1 Section 59, which describes the voluntary liquidation. It is actually one page of 9 clauses. But then when you go through the clauses, there is one clause which says, clause number 6, which says, please refer to section 35 to 53 of the code. So those actually 19 clauses also get added in this section. 19 sections get added. So I'll just read out what is there in the section. So section 35, it says, what are the powers and duties of the liquidator? So the power is to get hold of all the assets, take charge of the assets, Then keep the security and custody of the assets. That is our power, and duty is the security, and then of the asset, and then distribute the same among the shareholder is the duty. Section 36, liquidation estate. We have to prepare a list of assets. Assets held by third party also needs to be added. Assets held by us in fiduciary capacity or as a bailee, then you have to not exclude it. The liquidator has section 37 has the power to obtain information from any party. Then you can obtain information from the auditor, the company secretary, or whomsoever you think fit. In this process, there's actually a public announcement is made in the newspaper to file any claims. So one important duty of the liquidator is to consolidate all the claims, then verify that whether the invoices and the supporting documents are adequate, and based on a study, he can admit or reject the claim. And he has to inform to the claimant, the creditor, within 7 days, whether he is accepting or rejecting the same. And if the liquidator has rejected, then under section 42, the claimant, the creditor can within 14 days make an appeal also to the adjudicating authority, that is the NCLT. Then the liquidator has to go back for the 2 years previous accounts and to see whether any preferential transactions have been made, where any assets have been transferred to someone, or it has been transferred at a low cost, that is the undervalued transactions like section 45, or if he finds any fraudulent transactions, then he has to apply to the adjudicating authority, and then the transactions can be reversed. And the funds anybody has taken benefit can be retrieved also. So for studying the these kind of transactions, the liquidator, if there is any transaction 2 years back, preceding 2 years with any related party, so he had to study that of the past 2 years, or if there is any transaction with non-related party in last 1 year, so that you have to study whether any fraudulent transaction is there or not, and decide accordingly what steps he needs to take to get the company's funds or assets back to the company. Also, he has to see that section 50 extortionate transactions means if there is any credit facility taken and which is having exorbitant interest rate, that is called the extortionate credit transaction. So that also he can approach the NCLT and get the decision from adjudicating authority, what is the step he needs to take in such matters. Then last is the distribution of assets. There's section 53, which gives the waterfall mechanism, how the funds has to be distributed among the various stakeholders, in what order. It is given in section 53. Actually, in the normal liquidation under stress, this section is very, very important. But in voluntary liquidation, this section has importance, but to a limited extent, because all the creditors will get their money because the company is solvent in voluntary liquidation. If it is not solvent, we cannot start the voluntary liquidation itself. So what are the provisions? One is the section 59, then section 35 to 53. Then, like we have in Income Tax Act, the rules. Similarly, here it is called regulations. So there are around 54 regulations, which gives the entire operating process is described there. So we need to study in tandem the section and the rules to undertake this entire process. So actually, how the process begins? Before the voluntary liquidation, all the background work is being done from 1 month back actually. The first thing is the directors hold a meeting, and in which they will give a declaration of the solvency that the company is solvent and it will be able to pay all its liabilities. That declaration they have to give. under an affidavit. The second declaration they have to make that they are undertaking voluntary liquidation not to defraud any person. Third, they have to say that if there are any litigations, we have made sufficient provision. If any assessments are pending, we have made provision, and then we are undertaking this procedure. So this declaration they will present in the board meeting, and along with it, the last 2 years audited financials have to be placed before the board. Then they are solvent. So if they have undertaken any valuation to know the value of their assets, that valuation report also has to be shared. They also have to give all the list of pending assessments and proceedings. So this is a very new enactment. The third, but the pending proceeding has been incorporated recently. And this is very important because earlier when we were starting the voluntary liquidation, we used to start and then we used to realize there are assessment pendings, there are litigation. And then once you start, then the clock starts ticking and it is time bound. And then we have to continuously report to IBBI why it is getting delayed. And sometimes it is taking 2 years for the assessment to be completed. So now, to overcome that difficulty, they have enacted this provision that beforehand only they will share with us what are the pending assessment. Based on that only we will decide to take up the voluntary liquidation or to wait, get everything sorted out and then undertake the liquidation process. So once the board meeting is done and majority of the directors have agreed, we have to see it is majority of the directors who have to give their consent, then you can start. But after that, within 4 weeks of the board meeting, we have to do a shareholders meeting. We have to take their consent. The day the shareholders give their consent, the voluntary liquidation will be deemed to have started. That is the liquidation commencement date. This is a very, very important date. All the timelines are based on this date. That is the LCD. The resolution which is passed by the shareholders should contain the name of the liquidator who will be appointed as a liquidator and also the remuneration that is payable to him or her. And say there are some creditors in the balance sheet on the LCD. Then within 1 week of the passing of the shareholder resolution, we have to take the consent of the creditors. How many creditors? 2/3 creditors. They have to give their consent that they agree for the liquidation and they have no objection in the company undertaking the voluntary liquidation. So that consent we have to take and keep with us. Within 1 week they have to take. So subject to approval of creditor, the voluntary liquidation is deemed to have commenced from the date of passing of the special resolution. If the creditors do not approve later on, the process will not begin. Say the members' resolution is say 20th January, creditors approve on 27th January, but the LCD, the liquidation commencement date will be 20th January and not 27th January. The date will not impacted by the creditors' approval. So once it is commenced, the liquidator becomes in charge of the entire company. But the business will be also ceased to carry on, except where it is required for the winding up. So something is pending that the liquidator can complete. In this matter, in this process of voluntary liquidation, the powers of the board is not suspended, but he has taken over by the liquidator, and liquidator will approach them for whatever consent or to discuss with them anything. Then he can discuss with the directors. in the corporate insolvency, when the company insolvency process is there, the other company's insolvency process, in that the directors board is totally suspended. But here it is voluntary, hence it is not suspended. Now, what the liquidator has to do once he becomes a liquidator, we have to write first of all to the bank that, see, before we actually get appointed, no, we will just send to the company all the details that we will want. We will take before and only where are your bank accounts, who is the relationship manager, what is the email IDs, everything information has to be obtained beforehand. So in the day you are appointed, you have to write to the email to the bank that now I will be the sole signatory and no transaction should be undertaken without my consent. So the directors or the signatory, they cannot issue any checks once we are taken into charge, once we have taken the charge. That is the first and foremost thing we have to do. And then meanwhile, we will write to the bank by physical letter also to make us the signatory and then also to change the name. Either we can open a new bank account. But nowadays that option has come up that the existing bank account, we just have to apply to them to put the suffix involuntary liquidation. Like XYZ Private Limited, involuntary liquidation. That you get it returned in the bank account and then operate that bank account. So that is first step. And then all the checks what you receive today, you have to deposit it next day. It is written in the regulation. The next day it should be deposited. If the amount is above 5,000, you have to use check only. Never use cash above 5,000. So whatever assets you sell, if there are assets in the company, you will sell it. So whatever is realized in this bank account, all realization will come in this bank account. If there are other bank accounts, say, then we have to close those bank accounts. Sometimes, the company is in Bombay, but there are accounts all over India. We have to write that to them immediately and get the account closed and operate one account which is convenient and easily accessible to us. All the realizations of the assets, they have to, within 30 days, we have to hand over to the shareholders. Am I going very fast?
No, ma'am, absolutely fine.
Thank you. So first is a bank account, then we have to immediately inform to the statutory authorities. It is very, very time-bound process. So within 7 days, strictly 7 days, you have to inform to ROC of the initiation of the voluntary liquidation. The special resolution has to be filed through MGT 14 within 7 days, and the declaration given by the directors, the solvency declaration and the 2 years accounts, all we have to submit to ROC in GNL2. So all this has to be done within 7 days. Then we have to, within 30 days, as per section 178 of the Income Tax Act, we have to inform the assessing officer of the commencement of voluntary liquidation within 30 days. It is mandatory, and the AO has to respond back to us within 3 months timeline. It has been given to them that if there is any liability of income tax, what is the amount and how much we have to provide for the same. Earlier, actually, from in the April 18 when it came, it was mandatory to obtain no objection certificate from the income tax department that they have no objection in closing the company. But from November 2021, they have the IBBI has issued a circular and it stated that it is not mandatory. Earlier, it was very, very difficult because all the procedure was set, but it used to take three years to simply get the NOC from the income tax department. They will not respond, they will not revert, because even in the beginning, they were not aware of the provisions. So it was very difficult. But now it's a big relief that NOC is not required from income tax. We just have to inform them, and actually we'll see it later. We will issue a public notice in the newspapers to give the claims. So even the income tax department are actually supposed to file claim with us. It is their duty. We don't have to wait or ask them to do it. It is their duty. If they don't write to us or file the claim, they have missed the bus. Then third, if they are foreign shareholders, then we have to intimate to RBI that if there are any non-compliances by the company, please let us know so that we can regularize it. The idea is before we are exiting the company, let us pay all the liabilities, all the statutory dues we want to pay, and then we want to close the company. So it should not come on the liquidator also that this has remained. And then once the money is paid out to shareholders, there's no way we can pay anything. This is about the public announcement. What I discussed, this public announcement is made in 5 days. In 5 days, you have to take the code from the newspaper agencies, and there's a format given. There's a form A is given. In that form A, you have to fill the details and give to the newspaper for publishing. So one should be an English daily. And second is the regional newspaper, which is widely circulated. Say in Bombay, we have to give in Marathi newspaper, which is wide circulation. We have to give the advertisement. And we also, if there is a website of the company, we have to display on the website also. So what it says, the public announcement will say that the liquidation has commenced, and within 30 days, you have to declare, whosoever is the creditor can file their claim within 30 days. There are various forms prescribed in the regulations. If you see the regulations, in the end, they are given all the formats. The public announcement format is there, that is the Form A. Then there is Form B, in which the operational creditors, they will file their form for their claims. So the operational creditor may be small people, even the small liability may be there. So those, how they have to communicate to the liquidators, what is the mode of communication to the liquidator? It is by physically they can submit the form to his office. Actually in the public announcement, the Form A that we give in the newspaper, the details of the liquidator, like the professionals, name, address, and the email ID, contact number will be given. So the creditors can send us on email, or by physically they can send us the form, or by post also. So that they have 30 days to send, it can come to us by post also. So Form B is for operation creditor, Form C is for financial creditors. For the financial creditor, only one mode is, that is only by the electric email they can send us. They're not allowed to do the claim filing by any other mode. Say they are employees or the workmen of the company, they have a separate form given, Form D. So they also have all 3 modes of communication. And there may be other people, other than this, they can also give in Form F. If there are many employees or workmen, so they can authorize one person and he can file on behalf of everyone, all the employees. That is the Form E defined for him. This is about the preliminary report. So this is one, in the beginning, the basic findings we have to give, the liquidator has to give within 45 days of the liquidation commencement date, the LCD, the preliminary report. Now the report has to be prepared and given to the board of directors. And what is the report constitutes of? It will just describe who are the directors, who are the shareholders, what is their shareholding ratio, what is the business, what is the status of the assets, what are the liabilities we have to pay. It is a very preliminary report. And also the 2-year account that we study, like which I shared earlier. So if we find that he needs to investigate further into the accounts, he also has to mention here that any further inquiry he wants to make, that he needs to write here. Then if there any assessment, litigation is pending, any income tax refund is pending, everything has to be returned here. And now this has to be submitted to board of directors. It is very strictly followed within 45 days. In IBBI, everything has to be done on time. In the last, we will see in the final report, they give a Form H. It is a compliance certificate. So, it is like that tabular date. This preliminary report has to be submitted. What is the statutory date and when you have submitted? So everything is in black and white. If there is delay, there will be questioning. Why the delay is there? Everything has to be answered in the report. Why the delay was there? So we have to really make a chart and keep ready. Nothing is missed. This is the list of stakeholders. Now, from the beginning, if I summarize, first is the board resolution giving the solvency certificate. Then there is a special resolution by the shareholders. That is the liquidation commencement. Now, what we have to do after LCD? We have to write to the bank or to be sole signatory. Then we have to file the ROC forms. We have to write to income tax within 30 days. Then we have to make a public announcement in 5 days. And in the public announcement, we also have to, if there is business elsewhere, other than the registered office, we have to give public announcement there also. Like in one of our matters, it was making television serials. It was based in Mumbai, but the shooting was of Bengali serials. So we had to give advertisement in Kolkata also. So that public announcement has to be made, and 45 days we have to do the preliminary report. Now 30 days are over. We have received all the claims. So we have to verify the claims, make a list of the stakeholders. Now this section comes into play, and we are given 45 days. If they are creditors, we are given 45 days to prepare the list of the creditors, how much you are accepting the claim, how much you are rejecting the claim, reason for rejection, everything you have to write. This is the list of stakeholders you have to prepare and send it to the IBBI, the Insolvency and Bankruptcy Board of India, by email. This is the time given, 45 days, when there are creditors. But say there are no creditors in the company, then still you have to give the public announcement. And if no claims come in 30 days, so immediately in 15 days, instead of 45 days, in 15 days only, we have to prepare the list and give to IBBI. This list can be modified. The claimants will share their invoices and all the details and say you're not satisfied, then you will write to them to give more information. So in the light of the information given by the creditors, your claim amount may vary. So you can update the list of stakeholders again. This can be displayed on the website. If the company has a website, it can be displayed also. So realization of assets. So one of the important duty of the liquidator is to immediately, if you find a deposit given to someone, we have to write to them and obtain the assets. There's sometimes a share company, the amount has been given to the share broker, we have to retrieve the amount. All the things we have to realize immediately. That is our task. Then follow-up is also required. All these things we have to do. Even the bank account takes a lot of time to get activated. So that also requires a lot of follow-up. Say sometimes that capital has not been realized. the subscribed capital is there, but the paid up is less. The first of all, we have to write to them and get the money subscribed capital to be paid up. That is our step. We have to do it. And say the contributory, the person does not give his contribution, then he will not be entitled to get any the amount received in the end. He will not be getting the amount. If say we say if what happened if there's any amount which is lying unclaimed or we are unable to distribute, then there is a we have to deposit the same in the corporate voluntary liquidation account. We can get the amount deposited there, and when the claimant details come, he can apply in form 1 and obtain the money from that account, the corporate voluntary liquidation account. In one of our matters, it was a foreign subsidiary. So major shareholding is always the holding company. But one nominee director you have to keep because there have to be 2 shareholders. And the second shareholder had left the company and it was not traceable. Then in that case, we have to deposit the amount there. And if for 15 years, if no claimant comes, then the amount is transferred to the Consolidated Fund of India. So this is the assets have been realized, then all the liabilities have to be paid off. Even in this what happens, you have to close the bank account in the end. So all the liabilities have to be paid off. So what is the waterfall, that is section 53, how you have to go about payment? First is a liquidation cost. Whatever expenses you are incurring. In this, for any process of voluntary liquidation, the liquidator can appoint any professional. He can he has to appoint the auditor for the auditing the liquidation period accounts. If valuation is required to be done, if there are such assets which require valuation, say I had done one company in which there was a flat at lower parade. So we got the valuation done. And based on that, the valuation, we got it and then we distributed to shareholders. In that company, the shareholders' value was much more. The shareholding, his ratio of sharing, like the amount which was due to him, was much more than the flat value. So entire flat we gave to him. We took the consent of all the shareholders, and the entire flat was transferred to that shareholder. And wherein I was the signatory at the registrar office of for immovable property. So that is also possible. So the valuation we can appoint a valuer also. So we have a liberty. So all that will be part of the liquidation cost. Whenever we appoint and pay some fees for TDS filing, we can appoint for accounting if required. We can appoint a accountant. So that all will go in the liquidation cost. These are also the job opportunities for chartered accountants. See, if you are taking voluntary liquidation, the liquidator can't do, he is merely a liquidator. He will not do audit, neither he will do the TDS return and all. Then we can get tie up and we can do services we can give to other chartered accountants. Valuation. So that is also a job opportunity for other chartered accountants. First we have to retrieve the liquidation cost from this. Our fees also comes in part of liquidation cost. Then we have to pay to the secured creditor are there. We have to pay to them. If there are any loan outstanding or something, then we have to pay them. Then if there are any workmen of 24 months dues is mandatory payable. There are other employees, then 1 year salary we have to pay them. Then other than secured creditors we have to pay. This is the waterfall, how the money will flow. Then we have to pay to the government dues, any statutory dues we'll pay. Then other than this, any other dues which are payable, we will pay. If they are preference shareholders, we have to pay them. And then finally, it will be the equity shareholder or the LLP partners. So this is how how much time I have?
So, ma'am, you have 10 minutes more.
Okay. So the distribution has been made. Now the funds are still available. Then you can have we have to close the bank account. So since in the voluntary liquidation, the audit has to be done of the liquidation period audit. So we'll have to pay the accountant auditor also beforehand. All have to be if we want the lawyers for appearing before the NCLT, so we have to pay them beforehand. And we'll pay all the liabilities and then close the bank account. And it is very mandatory that the account has to be closed because the judges at the NCLT ask, they see whether you have got the confirmation, the closure certificate of the bank. They ask specifically. So the account cannot remain open. That is the requirement. Then we will get the account, we'll close the account. Until that date, we get the receipt and payment prepared and get it signed by the audited by the liquidation auditor. Now, see, I told you this is a very time-bound process. So, if there are no creditors, simply on the liquid LCD, then 90 days you have to close it. Just imagine, in 90 days the company is closed, the bank account is closed. And if there are creditors, then we get 270 days for the closure, because for the closure of the entire process. 9 months, that is. What happens if it is not closed in 270 days? The liquidator has to do the following. What? It has to now, it is now closed. Then we have to issue the notices to the shareholders and hold their meeting within 15 days of the ending of the 270 days. We have to hold the meeting of the shareholders. We have to prepare a report of what is the status of the liquidation. The status report has to be presented to them and then audited. The audit period, whatever has passed, like 270 days, we have to get it audited and also present that to the shareholders. This process has to be done. In the earlier, what I said, the company's refund was not coming, the company's NOC was not coming. So we have to hold this meeting every year. It's additional work for which we do not provide in beginning. In the fees, we should capture if this is going to be long. If it seems it's going to proceed, the procedure will take long, we should factor this in our fees beforehand. What is the status report? What I shared will include how you have paid the stakeholders, what are the assets, have you made any distribution, everything, the status, what are the litigation, what is the status of the litigation. Are there any such extortionate transaction or preferential? Have you filed any petition for the same? All this has to be disclosed. So once the account is closed, the audit has been completed, we'll prepare a final report. And the final report, what will cover all these things. Key assets have been disposed of, how and when you have distributed, there's no litigation pending. Everything will be given to the final report will be prepared, signed by the liquidator and given to ROC. And ROC, then again, you have to file this in GNL2. Then the GNL2 along with the Chalan, we have to submit to IBBI. So that is the final report, because then the IBBI is also satisfied that ROC has been informed. And then we have to submit to IBBI. ROC We have to submit in GNL too because it is very bulky. It will not go in the form. So you can email also, and we also submit physical also sometimes when it is too bulky. Because entire bank statement also have to be attached in the final report. Entire bank statement, the entire resolutions that have taken place, then the MCA status, where MCA, when we file the ROC form, the status of the company will change to in liquidation. So that status also we have to submit to in the final report. Then also to IBBI. Then what happens after final report? We have to make a petition to the NCLT, the adjudicating authority. That petition will be, now everything has been dissolved. Now please give us the dissolution orders, from which date the company will stand liquidated. So we make a petition. We usually take help of the lawyers, and there's also a opportunity for us to appear before the NCLT. We sometimes bear ourselves also and appear in the NCLT ourselves, because we have undertaken the entire process. So we are very much well equipped to represent, and we can answer very much to the satisfaction of the judges, because the lawyers may not take the grasp of the entire thing, because they don't know the provisions so thoroughly as we know. So that is also a job work opportunity for us. So once you get the order, then within 14 days, we have to inform the we have to file the this INC 28 with ROC. The NCLT final order will be uploaded at INC in INC 28, and then when it gets approved, the status of the company will change to liquidated on the ROC website. Then that is the end of our procedure, entire process. This NCLT order we have to update to IBBI also. Actually, IBBI, every 30 days there's a reporting. What is the step of the voluntary liquidation? We have to intimate IBBI every 30 days. So that will also be covered in this when this order comes. So I've given up, and you can, when you work on this, you can refer to this process flowchart and the timelines. It is self-explanatory. How much the public announcement, how when you have to inform the IBBI, everything is given you, and we can come to your help. All the timelines. It can also be suspended. The process can be suspended when we file. Say we start, and then we find that so many GST liabilities there, so many TDS liabilities there sometimes. So we have to say a traces, and we find that some liabilities outstanding. Then we can say, if it is unable to pay, the company is not solvent, we can approach the NCLT and say we cannot proceed further in this because the company is not solvent to that extent. And if we find it is being too fraudulent, then also we can approach NCLT and get the process suspended. Rather than the blame coming to us, we can get it suspended beforehand. This is the provision for the income tax, where it states that 30 days you have to inform. Just for reference, this is also some taxation as impact I've covered. So when you undertake, you can see where we use taxable, the capital gains in the hand of the shareholders. To the extent of the reserves, it will be deemed, it will not be taxable as capital gain. There are a few question answers which may sort out any doubt that you may have.
Yes, ma'am. So, very remarkable session. Thank you for the same. Now I would like to ask some questions which our audience have asked. Okay, so first question is, condition for voluntary liquidation company should not have committed any violation of laws. Who will confirm that there is no breach committed by the company?
That will be informed by the company only. That will be informed by the company only. Or we can do, we can study the annual balance sheet, but we studied for last 2 years. From that, we can see then zoba.com is there. We can study if you see anything the company's name is coming in any, then we can refer that. Otherwise, it is on the company only if they share something or any information on the public domain.
Okay. So the next question for you, ma'am, is permission of creditors for voluntary declaration. Is permission to be obtained separately from secured? Oh, I think the question is not complete here.
Yeah, from all the creditors. From all the creditors, 2/3 of the creditors they have to give. 2/3 of the creditors in value, they have to take consent. There is no distinction between secured and unsecured.
All right. So next, someone has asked to share the PPT if you can to the participants of this session. The PPT which you just explained.
Yes, I will share.
Yeah, and the last, okay. Last question for the session. What is the responsibility of IP for past breaches done prior to 2 years?
Liability on the, if anything, see, that is not coming like, if there are any breaches before that, see, if it comes up and if we come to our knowledge, then we can actually pay it off. If it comes or if they file the claim, then we can pay it off. If something should come to us. Otherwise, we can always take a declaration from the directors that there are no this thing. Whatever we want to safeguard us, we can take it from directors. In fact, when we are foreign shareholders, we have to take a certificate from the auditors that all the provisions of the IBBI have been followed. There are no litigation outstanding and there are no outstanding liabilities of the company. That declaration also we have to take from the auditors. So it is up to us how we can safeguard us. We can take declaration from directors in our name to safeguard ourselves. Utmost care should be taken. Like the MRL that we take, here also we can take an MRL and safeguard ourselves.
Uh, okay, ma'am. So one last question from my side. So what should be the ideal fees as a chartered accountant we should, charge from our clients under this whole dissolution process? A range if you can, share, or is it depend upon the turnover of the company or the share capital? So what is that?
See, actually, it depends on the complexity of the case. You see, go through the balance sheet, and if there are a lot of some companies, the asset is there, like mutual fund is there, shares are there, and fixed assets is there. Depends on the work involved. If there litigation is there, if there's refund which we have to get follow up done, so all these things will affect it. Actually, it depends. Like this foreign, it all depends. I cannot. You can always approach me if anything you want to discuss.
Okay, so it is basically you can say case to case basis, and
Yes,
if you want a guidance, we can directly approach you.
approach. Yes.
Yeah. Okay, ma'am. So thank you so much for a so informative session. Uh, thank you, CA Sudha Navdar ji. And I would like to thank the chairperson, CA Preeti Salva ma'am, to for conducting such knowledgeable sessions for us. Uh, Now I would like to take a leave and hand over the session to our next moderator for the session, CA Mansi Patil, to welcome our next speaker, CA Nisha Gala.
Thank you. Yeah.
Good afternoon.
Mansi, you there? Mansi, we can't hear you.
Nisham, this is your session.
Yes. We start?
Yes, ma'am.
Okay. Yeah, I just share my presentation. Good evening, everyone. And today, I'm firstly would like to thank the Institute of Chartered Accountants of India and the Women Members Excellence Committee, CA Preeti Savla and CA Kenisha, for inviting me here and allowing me to share my experience and knowledge in this field. Um, I do have a presentation with me, but I would love to have a dialogue and share wherever examples uh, crop up in my mind related to that. Um, yeah, so coming to performance management and appraisal. Uh, for most of us, the month of March, April, May have been taxing in a way when it comes to doing our calculations of profitability and trying to work out, because that is the time when the employee expectations are high, and all the workings related to their salary revisions and the bonuses and all that happen. So April, May, I believe, is our months where the anxiety level, the expectation level, the hopes are pretty high. And so for some, it is a very simple math. You just work out your profitability of the firm, and then whatever you have decided to allocate it to the salary revisions, you even it out across your employees. And for most fortunate for whom this simple math works good, but I believe it has its own pros and cons. And that's the very reason I believe that all of you are here, because all of us face similar kind of issues when these April and May salary revisions happen. So today we're going to discuss about what, how, and why this whole structured process is required. Now, a CA's office structure generally is kind of flat, where not many hierarchy levels are there, where there is a partner proprietor who directly deals with either the semi-qualified or the qualified team and the articles, and then there are graduates and other admin staff. So while the structure is very simple, the the kind of work that they do is very uh, different in terms of, it cannot be comparable. So for example, or on the one hand, you might have one of your senior or a semi-qualified who's doing an internal audit throughout the year, and then there's another senior who's probably handling 20, 30 odd audits. Now, how do you compare, or how do you fix up what salary hike you should be giving one against the other? Then there could be, then you have layers of article students. Now, whether do they are, the institute has already prescribed standard stipend for them, but based on our own culture, the articles definitely expect something beyond what is the minimum. So how do you arrive at what the article student should get? Then there is a layer of, the admin or the graduates who are, also involved in a lot of routine and, regular compliance tasks. Now, how do you decide what should be the salary hike for them? Secondly, the kind of work that we do is not as mathematical as, based on the number of sales that is done, or number of clients acquired. Also, we cannot compare somebody who has filed 30 returns in the IT season with somebody who's an audit manager and does 3 or 4 complex audits. So then in such kind of a structure, how do you have any kind of a review or a performance parameters? Similarly, when there are more than 1 or 2 partners, who there is multi reporting, where not one person works with a team. So depending on the availability of the person, work is allotted. Not many organizations again have a very defined kind of allocation of work. So it could either be client based, or it could be, there could be rotation of clients across the team. So again, every one of us follows a different structure within the flat layout that we have. So in that kind of a scenario, how do we and what do we do so that, there is the April, May, once those salary revisions are done, and when we have to sit in the cabin, addressing the grievances and, the dissatisfaction, conversations that often become very difficult. How do you deal with that? So, and year on year, you feel that, that you should be doing something about this, because as we move to a more AI driven and technology driven environment, getting the right people is a challenge. Having people to stay is a challenge. Then, how does this performance evaluation mechanism work? So the typical way we, chartered accountants are known to be dealing with this is that in April, May, when we are sitting with the, with the reviews, I mean, the salary revisions, we remember most of it is through our memory. We remember somebody who has outperformed in a particular assignment, or we remember how the client had complained about someone who was very casual or very disrespectful at the client's place. And then we realized that no, I would like to cut some marks for somebody's misbehavior, or I would like to give some brownie points to someone who has this. So all these calculations, all these permutation combinations are very memory based, or if we have a habit of noting it down in our respective diaries, then it's just that a reflection of add something and reduce something, and not a very structured way of doing it. So yeah, going to from that level to a more structured way, where year on year, once you have set up the mechanism, how you can benefit from it, that is going to be our scope of discussion today. So, like I mentioned, now an employee, you may have an employee who writes, who's handling your client's accounts, and she's been doing that for years together. So, no complaints. She's been doing her work properly. Now, what is your reason for giving her a hike? Is it only to match the inflation, or is there more that is expected which is not coming out of her? Uh, Similarly, now that in a scenario where you want to recruit someone, and the salary expectations of the new people are almost matching with somebody who's there with the organization for the past many years. And trust me, this is not a situation only with our a CA setup. This is across top organizations, top companies, where they face a problem. And this is not only related to inflation. Where we are not trying to only match the inflation. Uh, the new people that are coming on board come with a different kind of skill sets. They are trained in a different environment. Uh, uh, we cannot deny the fact that they are more tech savvy. They more, but at the same time, they lack experience, they lack maturity, and so there is the where we have to balance out. Why, and give our own justifications of why and why not when we are recruiting someone new vis-a-vis somebody who's there in the organization. So again, other grievances that we face, which I have come across, and they can each can be dealt with in a different way. Is somewhere, yes, like I said, senior team members are discontent with their salary hikes. The comparison comes that you are giving somebody who's new this much, and I've been with the organization for so long, so all those conversations which really become difficult, and where giving justification becomes challenging. So low productivity and lack of willingness to and zeal to perform. A lot of times when you have most of our CA organizations, we have uh, team members who are loyal, integral, and who've been with our firms for almost say 10, 15, 12 years, and they've been doing the same job religiously, and we have absolutely no complaints. But now they've reached a, they've crossed the peak of their performance, and they are kind of getting a little stagnant. Now, how do you deal with them? Their productivity is not increasing. They are not motivated to learn anything new. You are not in a culture where you would like to ask them to leave, because eventually they are doing what they are expected or they were doing for so long. So where is the complaint? So again, this again poses a challenge to most organizations, who have a team, a dedicated team, and now they want to recruit more people. Again, unavailability of required talent and scarcity of team. Now, this again is a challenge across organization, across CA firms, small, big, medium, large size. Where finding the right people poses a challenge, and that is where you want to retain those with you, and you want to keep them motivated, but they have their own challenges. They are not trained enough. They are not updated. So yeah, and then dealing with untrained workforce. Like I said, uh, the new workforce that we're talking about is the Gen Z and the millennials, who have a different kind of a mindset, who probably would not stay with you for long. They would want to change every 3-4 years. They want a work-life balance. They want holidays on Saturdays. So somewhere there is a shift in the way, we used to operate, or traditional CA firms would operate. And it is only in our betterment that, just like we raise our children, and we try to strike a balance. Similarly, the organization will have need to modify, or update their culture to match the aspirations of the changing needs of employees. So again, is it all about remuneration? So all performance management, the topic of today, we're going to be touching it, considering that it is what we have been doing all this while, or what traditional CA firms have been doing this all this while, is in April, May, when we sit for these calculations, we are only talking about X percentage increase or Y percentage increase. Very seldom we actually sit and understand the aspirations of the employees, why they are stuck to our organizations, what is it that they love about the organizations, and how loyal their affiliation to the organization is. And maybe that's a factor which needs to be positively harped on, so that most can be extracted from. So yes, it's all not always about the percentage hike. So coming to the question is, when there is a flat structure, when the kind of roles and responsibilities are similar yet different, when the expectations are of performance are different, how do you bring about unanimity? Should you bring about unanimity in in appraising them or promoting somebody vis-a-vis the other, or giving someone a more challenging role as compared to the other? So, and again, how do you keep your team motivated all through? uh, in a typical scenario where the season, our the CA kind of work is mostly seasonal, where now the return filing season will start, and then the audit, and then the GST, which is round the clock. And there was a banking where the banking audits took place. So very seldom, or firms are in a have clientele where there is round the clock work. So there is some kind of a rest period, which should be utilized for sharpening the axe, or doing strategical changes or modifications in the organization, so that the next work period is more effective. So for those deep drowned in execution, where I mean, where we are, where the partners, proprietors are themselves get down to the execution level, it's time where that you should take time off to think more strategically, think more holistically about the growth of your organization, and develop a team which will work for you. Then only you will be able to run at a speed that you would want to. So yes, does your firm want to grow? Have you charted a definite growth plan for yourself, or is it that you take up whatever work comes? Because is it a game of sustainability, or are you at the next level of growth? Um, do you see work coming in, now that you're acquiring more knowledge? So you want to equip yourself, but you find it difficult to take up more work because you don't have the necessary team. So all these challenges are there. So should you focus on the work that is hand in hand, or should you focus on something which you would like to take up, or which is the more growing area, which should, and you should be acquiring clients and meeting clients, and getting more work from those new developing areas. So while a CA's life is kind of rotating around all this. We now have AI, where we are, trying to equip and understand how it can help us match this, gap of the desired, team that we need. So how it can help us reduce our workload, how it can streamline a lot of work for us, so that, the need for extra manpower gets reduced, which any which ways is is scarce. How can you do that? But again, for ourselves to get equipped with the new technology, we'll need support from the right team members, whether it is they taking a part of your responsibility and you can focus on growth, or they helping you upgrade, or be a part of the growth story of your firm. So yes, if the answers to most of this above questions is yes, then let's look at how an effective performance evaluation system can help you achieve that. Before we dive into what is performance management, and the what, why, and how, there are some things which keep us at a bay when it comes to having such a structure uh, in our organization. The most common and the obvious one is that this is for large organizations, and we are small. We are only a 5 people team, or we are only a 10 people team, and it doesn't work for us. Um, Let me tell you that uh, whatever be the name, in every the role, or the function of this performance, whatever is there about performance management or appraisal, or whether it is marketing, we as proprietors, or we as partners of the firm, are already doing it. So it's just about having a structure and a process in place, irrespective of the size of our firm, so that all these biases that we have, and the year-on-year challenges that we face as far as team motivating team and managing team is concerned, are resolved. So yes, performance management is everyone's lookout. And again, what does an HR do? I mean, what is the role of an HR in a CA firm? Like I said, everyone in our own roles as partners, proprietors, or even senior managers, are are performing our duties and responsibilities and HR. So you need not have a separate department or a designation, who takes care of all these activities. So it is a myth that, these are all corporate jargons. These are all for large organizations. Ultimately, HR is a function. So it can be done by a separate person who's qualified for the job, or it can be by you yourself as the owner, or the mentor of your organization. So the function has to be carried out, and whatever is required, whether it is recruitment, whether it is training, whether it is these performance appraisals, all need to be streamlined, so that your role as a CA, or should be to grow all these administrative aspects, or all these the training aspects, all the recruitment aspects. If you have set processes for all of these, then you can focus more on the quality of your execution, on the growth aspect of your organization, rather than getting bogged down with the intricacies, or the day-to-day responsibilities of working or handling a firm. It is a time consuming and complex exercise. Well, if there is no such performance evaluation system, then yes, devising one, having it rolled out, having will require some considerable time. But once it is set, once you have it, reviewed, and once you do a trial run, and it becomes a part of your system, then the benefits of it you will see as you grow from 5 people to a 10 people to 15 people organization, or when you probably say have to merge or network with another firm. So those are the times when you'll actually see the benefits of this rolling out. So yes, it will require timely reviews and upgradations, so that you cannot set it up once and then forget about it and let it work. You will have to make it time relevant, so that you don't miss something which is happening outside, in the outside world. Again, ultimately, whether it is about arriving at those percentage increments and not having to answer or discuss why you got an X% and why Y has got a Y%. No, performance appraisals or management system is a little beyond arriving at those numbers. It is about retaining the employee. It is about making that employee an asset to your organization. It is about sufficing the training needs of your team. So it is a more holistic approach to dealing with people. So if we are talking about performance management and appraisal, and a lot of times it is interchangeable and it is considered as one, but there are very uh, prominent but few differences in the whole. For our uh, general understanding, let's take it as performance review, and we'll also deal with how management and appraisal are can be distinctly done, and yet they complement each other. So they should not be done. One should lead to the other. So performance management is an ongoing process. So what we are usually used to doing only at the end of the year, or on year, management is actually about doing having a discussion or having reviews on occasional basis, on a continuous basis. So one may argue that, yeah, we sit with them for how they've when they're reviewing when we are reviewing their audit work, or we are solving their queries, and we are in touch with the team. Then what is this all performance management different about? So how often do we, so when an article or an employee or a senior, when I'm referring to a senior, I mean a qualified with 2 or 3 or 4 years experience. He is expected to do an audit. Now, in an audit, he's expected to do vouching. He's expected to do whatever audit trail, which is the new requirement. He's expected to, do some test checks, and he's expected to complete an MR. So he's expected to do X, Y, Z and things. And once he does it, once he gets his audit report for review, you check and that's done. Now, where does the management aspect, or how do you assess whether the audit which is done has been up to the mark, or there is the quality has not been compromised? That is where you say that I need, these audit to be completed by, say, this time frame. I need, I need that this audit should, all the documentation related to this audit should be, complete, and you should take care that, uh, wherever any proof or is required, or any submissions are required from the client, they are done. I expect that the person manages the team which is the articles under him in a very judicious manner. All the paperwork is neatly filed. So these are your expectations from, say, a person who is on an audit. Similar expectations you would have from somebody who's filing a return of, how he communicates with the client, how judiciously he applies his mind to ensure that none of the tax provisions are missed, how he advises client to where say the client has failed to provide any supporting documents. So those are expectations, underlying expectations, which are not clearly communicated, that I need you to do this. It is given. Now these are the expectations which become often the reason for the person performing or not performing to your expectations. Why? Because these were never communicated. When somebody takes more time in completing the audit, the question arises that the client didn't give the work on time, or his balance sheet was in a mess, or we wasted. And then you are the dissatisfaction that you've had in the performance is displayed, and often it takes a very sour way, that you never you had you communicated that these are the timelines, and this is the you cannot exceed your uh, you know uh, your because the client remuneration doesn't match, or the quality of whatever documentation you've done is not enough. If these parameters are communicated well in advance, or they are documented that these are the expectations from anyone who does audit, then there is very less scope for any kind of a mismatch or mismatch of understanding. Now, when we are saying performance management, it's that whether those checklists which are there, they have been fulfilled, whether whether the timeout, or whether the timesheets which were supposed to be filled up, those have been filled. So all these aspects are clearly documented, and they are clearly communicated with whoever down the team, whether it's your senior chartered accountant, or whether it is the article firm, or whether they are the semi-qualifieds or graduates who are working on that assignment. Clear communication of what is expected out of them is given. So performance management is more of a holistic approach. So again, it is like, on a continuous basis, assignment after assignment, you actually sit with the team and understand what were the mistakes. Probably someone is not very great at, writing an email or writing queries to the client. Now, those things need to be addressed at the time it is actually happening, and not wait for the year end and tell them that no, look, you need to improve your communication skills, your language is not is very harsh, and it becomes the client is not liking it. So those are the qualitative aspects where you need to praise your team members during the course. It has to be a continuous process. Again, the performance management is something which is aligned to the vision, mission, and goal of your organization, which where you should first have one for your firm. So what I mean, our aspirations as CAs, as we get more work, we get a certain kind of quality clients. Our remunerations are high, but these are there. Now, what are the things that will help us achieve those goals? Are that our client communication is good. We are very responsive to a client. When a client sends us an email, we reply back instantly. And so these are the quality aspects. Now, when these expectations are communicated to your team down the line, then they know that they are expected to do this. And once you do this, you know what, you are in the good books of your clients. And then whatever your larger goal in the organization, so everybody is actually working in tandem with what your organization stands for. The objective of performance management is to offer feedback. So like I said, where somebody needs an improvement in a particular aspect, you cannot and should not wait till the year end to tell him, nahi tumne ye nahi, you didn't do this, and that's why I have not given you your rise. And those kind of conversations only become sour and bitter, and they don't really help. The approach should be that I want you to become a leader in the next 3 years, or I would like you to handle independently this organization, but you will need to work on your, say, communication skills, or you need to work more efficiently with your team. Now when these quality aspects are communicated, or are shared, or are discussed on a regular basis with the team, then they also feel motivated. They also feel as if they own, the ownership and the responsibility comes, and the performance itself, takes a different, level. So performance management need not be clearly, we have a performance management system. Although in large organizations there are tools, but if I may generalize the and talk about organizations which are, say, from a 10 to 25 to 50 people organization, we do not need any other tool or any other device or mechanism. It's simply have regular interactions with your team and on the performance parameters. We'll discuss about what could be the performance parameters a little later. Again, it can be flexible. So for those, say, if you have departments where they are filing returns, or they are doing GST or the compliance work, the parameters for them could be different. For those purely into consulting or purely into long-term assignments, the parameters could be different. The basically, ultimately, whatever you decide as their performance parameters, they should be aligned to the long-term vision of the organization. It's a two-way communication. So again, when you are deciding, it's not that you have to do this. If it is not possible for the team. So for example, a lot of us face this problem where the employees turn up late to office. Now, punctuality, you cannot harp on them. Yes, I need punctuality and I want everybody in the office by 10:30. For whatever XYZ reason, if an ex-employee is not able to reach on time, discuss with him what the problem is and what can be best. If he agrees to stay, and if it is a viable reason, and if he agrees to stay back and complete an average working hours, and if the culture of your organization permits, then probably you can allow that. Now the same thing, your another employee may come, that you're allowing him to come at 11:30, but you're not allowing me, that I come late, you're not permitting me that. Now there is, where the grievances and those complaints and those comparisons come. And that is where, the broad, where you're saying that the culture of the organization is that overall you should be working for X number of hours. And if that is fulfilled, then you're okay. Now, uh, these are the kind of solutions, or these are the kind of conditions that you can already document in a something like a office process manual or an office administrative manual, so that anybody who comes new knows that this is what is permitted in the organization, this is what is not. Now these are the HR processes or the management processes which should be in place right from when you are two people, even if you're a startup, or when you're growing from 10 to 15 people or 20 people organization. These are very basic documents which will ease out a lot of your administrative efforts. Now, appraisal. Appraisal, again, it is a more structured, more standard. So you have So while say for your audit team and your income tax team, the parameters for their performance could be different. There could be some givens which cannot be violated, or certain expectations which should be fulfilled by one and all from the organization. So whether it is the leadership qualities, whether it is about handling problems, or handling difficult situations, whether it is client interaction. Now, these are the extra added, parameters or points where you would want to take decisions whether you want to retain this person for on a long term basis, whether you want to promote this person. So these are some things which is, if the person fits those pointers which you've laid down, then it's a yes or it's a no. So it is more something which is black and white, not always though. It can be gray, but yeah, broadly this is a more structured or more definite, a more rigid kind of kind of an activity which is done probably at intervals, so regular intervals. So it could be half yearly, it could be annually, or it could be quarterly. So and the meeting for such appraisal is specifically only for that purpose. So where again what is expected of the, or the discussions revolve around what is expected, what is not happening, the training needs, what the person needs to really update himself about, what are the what are the things that are missing as far as the performance is concerned, and so on. So this is again, done by an HR department ideally. So if we have to say performance, if you have to differentiate between a performance management and performance appraisal, then performance management is ideally done by the immediate, senior. So if we have a structure where there is a partner and then there is a senior and then there are articles, then the performance of an article will be reviewed by a senior. The performance of a senior will be reviewed by the partner. And in an organization which does not have a separate HR system, or you could either outsource one, or then in such case where there are two partners, one partner could actually review another. So the way I will share how an appraisal is done. So you could have a standard form which the employee fills up, and based on those whatever he or she has filled up, somebody who has an unbiased view of the particular employee can review it, can compare it with across other people from the organizations, and then take a collective call of whatever appreciation, acknowledgement, or feedback that needs to be given to that person. So it all can be tailor-made depending on the structure of each firm and each organization. So why do we need, again, I've already discussed this in detail, that how does it benefit to have a proper performance appraisal or management system? Expectations. If so, for example, I shared that an account, somebody who's writing accounts for your clients is doing the same work for the last 3 years, 4 years, and now a point has reached where the salary is not matching the output from this person. So while the person is doing what is expected, whatever was allotted, I would put it that way, whatever work has been allotted, there is nothing more which is coming to the table. And that is where maybe some kind of a review where the employee is encouraged to upgrade or update himself with technology, or where he or she is motivated that how the person can take up more work by completing whatever is already in hand, or by using technology, or by delegating some kind of work, or by different ways. So the same accounts person who was earlier doing about 20, 30 accounts for clients can now, because of XYZ training, etc., can take up more work, and you need not then look out for additional additional people. So this is a very basic example where this person has to be sat across and told. So for example, so somebody who's already doing the 20 accounts, what more would the client expect from them? You're doing the accounts, you're filing the returns, you're complying with their TDS, GST. How about a value add where you give them an MIS, or where you bring out that they are probably the cash flows are not properly managed, or you give them suggestions. Now these are the value adds. When you give your client, the client is happy, and they may probably give you more work, or they may refer you to to their other friends and colleagues. Now this is the kind of branding that you want to do for your organization to get more work. And so this is all a vicious circle. Once you know, once you have your goal clear, or of growing, then you encourage or motivate your team under to perform to their optimum. You give them all the resources, you send them for trainings, you have trainings in your office, you update them. So all those things you need to do. When they are motivated, it will show in their performance. When their performance shows, the client will be happy, and this vicious circle, and you'll get more clients, and the same clients can actually go to the person, and the salary then gets justified. So somewhere you will have to start the process, so that then it will have a rippling effect. Yeah, opportunities for growth and development and recognition, which is a lot of times it's all about the like I said, it's not always about the money. It's about the comfort, it's about the culture of the organization, the attachment people have to the organization. So even if you give them I would say, if you're they're not happy with their salaries, but they want to stay for, because they have been a part and they feel connected to your firm. So for managers, your managers means if there is no second layer, then it's directly the proprietor or the partner. So when your goal, say, of acquiring more work from a particular client, or when growing in a particular area, you have identified it, then all your efforts are towards it, and you bring your team aligned to those efforts. So for example, few years ago, when GST was upcoming, and a lot of firms were actually equipping themselves to because work was definitely going to flow. So at that time, if you have had a motivated team, then the chance of the realigning existing work and taking up some members should have you could keep some people free to take up new work. So all those permutations, all those combinations could have worked out had you planned an effective a team behind you. And for the firm, yes, increase productivity, performance. Like I said, it's a rippling effect. So you grow, I grow, we all grow. That's kind of the motto that should be that works. Question is now, how I understood the importance, I've understood, the relevance of having a structure, but how do I start? So I'm only a 5 or 10 people organization, and there are people, they say, what is gone, why suddenly this new system, and we were happy with the way things are going. All the resistance will come, the resistance to change will come. So the only way to deal with this is, rather than enforcing whatever new things you want to develop in the organization, start with the why. It's communicate with them why it is necessary, the environment outside is changing, and why when if they want that their jobs should be secure, and they also grow along with the changes that are happening outside, then it's the need of the hour. So once those communications start, there will be some people who will be with you, some people who will resist, some people who will be okay about it. It's all about managing them and being persistent, in pushing. But for that, you have to be very clear and focused that you want to go that path. So yes, communication, gaining trust will play a major role of having the team on your side, that yes, we want to now have a more structured way of working. This haphazard manner, which is causing issues to them also, will not work in the long run. Start with a very simple process, like I have shared in the coming slides. So it need not be very complex. If our organization is flat, only put what your expectations are on paper, and then discuss them and see if mutually it can be agreed. So for example, if somebody needs, you feel that your entire team needs to be trained in advanced Excel, and they should now know how to use AI or ChatGPT to do certain Excel functions. Put it down that this should be what should be achieved during the year. As simple as that. And give them opportunities. So if there are trainings outside, or if you can have trainings within the firm, give such opportunities. And at the end of the year, this particular this particular goal that you have set for the person and for the organization is achieved. If that is achieved, you can very well say that your parameters are fulfilled. So as simple as that. Invite feedback and suggestions. So make this again, approach, make it a very inclusive kind of an exercise. If this is, again, if you're starting new, if you don't have any such structure in place, or if you are failing, if you are facing resistance from your team for having a performance management system, or a very a very what do you say, rigid process in place. So you're having people on board would be the biggest asset you would have, rather than imposing on them all these new developments. So, and invest time. So I said, your time as a professional should not be, it should definitely should be more focused on the quality and aspect, the growth aspect. If you have an able team below you, you could actually become, you should actually work towards becoming redundant, that they are managing everything and you're out there getting more work, doing your PR, and growing, taking the organization to the next level. So yes, there may be standard templates. There may be, a lot of it is now available. AI, ChatGPT can also give you a lot of things, but you will have to make it tailor-made to your organization. So you, like I said, you could start with a simple goal form, have 3 or 5, smart goals that I will say, for example, again, I'm giving very simple examples. You say the up to 31st July, 50 returns have been allotted to ex-employee. Just ask him 50, obviously before the due dates you have to file, but how about keeping a target that at least 80% of the work gets completed by, say, 20th July, so that the last minute staying up late and all those things don't come up. Now that can be some achievable target if we manage to it's kind of, it motivates and it kind of energizes the whole process, that now you have something to achieve rather than the last minute rush. So those kind of things can be, for example, put up in in the goal form. Then trading needs, or say completing a particular examination by the end of the year. Those could be specific goals related to the person, which if he fulfills them, you benefit out of it along with he or she himself. So as the team members to fill the form diligently, again, there will be resistance. Sit with them. The initial few years will require a lot, some kind of time involvement. But once it becomes a process, even the new people who are coming in will automatically get into the, groove of it. So then you would not have to reinvent the whole wheel. So reviewing at regular intervals, pushing them, and acknowledging whenever somebody does some good work. So you could the appraisal form at the end, there could be qualitative and quantitative aspects. Skills are very important, so while we don't clearly define them, underlining, we do expect that they behave themselves at the client place, they are neatly dressed, they don't overshoot their time, or they don't they're punctual enough. So those are the kind of things where you could, at the end of the year, which will be a distinguishing factor from one from another, when you are actually rating them. So again, if you want to retain somebody, or you want to give them growth prospects, you want to invite somebody from to become a partner, what are your you need to match your, it's like matching the two kundlis of the people. You should like it's a thumb rule, never match, or never have somebody in a team who's exactly like you, because then what is the need of the other person. So you should always look at people, recruiting people who have something which you are missing. So you could have complementing skills. Somebody may be very good at managing team, but his academic knowledge would be a little less. So then hire somebody who's very thorough with his academics, who's very thorough with his theory. So then both of them in a team could work wonders for you. So those kind of things you could have in your performance appraisal. Again, like I said, it need not be a standard across organizations. If you can take a template, but you need to look at your own organization. You need to look at your existing team members, and the members whom you want them to come on board, and then have this structure in place. So I leave you with some thoughts about people management. Never before was the need to have the right people when there is scarcity of people, when there is AI and chat GPT, etc., to take over. And how do you sail through this changing environment? So effective performance management and appraisal system is your answer. With that, I thank you all for hearing me out. And yeah, over to you, Aarti.
Yeah, thank you, Nisha. It was really a wonderful session. You actually have wonderfully addressed our everyday issues and realities that we face, in our day-to-day life, managing office. And I can say it is more tougher for us to manage office rather than home. But yes, this session will surely help us, to plan, to address the things in a very well planned manner. Okay, let me check if we have any questions. Oh. Only one apt comment, what we have received. No questions are seen, but Ms. Ritika has mentioned good session. And I fully agree to it. I really agree to it. Okay, so on behalf of WMEC, I extend my heartfelt gratitude to Preeti ma'am and Yamisha ma'am for their meticulous planning and tireless efforts for this initiative. And thank you to our amazing speaker, Miss Nisha, for her insightful contribution on the topic. And we are very sorry for missing out your introduction session due to some technical issues.
No.
But yes, your session, we say it would be very apt introduction. You have covered everything, and it will be very helpful for many of women CA that have joined today. And surely to our participants for their time and quality of participations in the topic, and looking forward for such a wonderful initiative in future as well. Thank you, everyone.
Thank you.
Do share your PPT, Nisha.
Sure, I'll do that.
Yeah.
Thank you.
Thank you.